I keep getting asked the question about key levels. Are these key levels correct? Are these key levels good? How do they look to you? How do I draw a key level? So I think it's best that I just make a short video about it, how I draw mine, because levels are open to interpretation just in terms of what you see in the market. So I'm just going to show you how I draw mine very, very quickly. We know that in terms of a level, the market will establish a level itself by just being a little bit patient and waiting for price to form. So when we're in an uptrend, we're looking at this here, and each time price kind of comes down and tests a previous high, that is where you're usually going to find the strongest level, and that's where you're going to usually find the strongest level there. Okay, and we'll look at this in terms of a live example. There was a brief period on Euro Canadian dollar where it was trading in a really lovely range, so we're going to use that as an example. What you also want to take into account is when we are drawing levels on charts, we are always starting from the 4 hour and working our way down, so we're doing some top down analysis. Okay, another quick tip is you will always want your charts to be as clean as possible, as less stimulating as it could possibly be. The more boring your chart looks, the better it is. The cleaner the chart, the better, because it won't you know, it will just make your entry system a little bit easier. It won't stimulate your psychology. So what we do is we go on to have a nice clean chart, we go on settings here and we bring up the canvas. We make sure our grid lines, which are now showing up, are turned off. Your colors are up to you. I like a white chart. I used to trade off a black chart with red and yellow, it's standard, but if you look into the psychology of it and look into why that it was created, green and red, it was used to it's created by brokers and used to stimulate buyers to help them, or buyers and sellers to help them lose money. I'm sure someone might say that's wrong, but that's what I've read and that's what I've heard. So I like to have just really neutral stuff, you know, like grey. This looks very black right now because it's a dark blue. I do have green on the way up, just literally for the branding, but I actually switched to I have a different colour system which I'll quickly show you, and it's blue on the way up and dark blue on the way down, just because I find it's less stimulating. I like to short the market, and when I see a green candle it sends me a little bit doolally sometimes. But yeah, getting back to drawing on a level, okay, on a chart you will be able to find a level pretty much anywhere because price is always moving and it's always making structure. So if we close if I close my eyes and I go to like here, we can find a level. In fact, we've actually found a relatively decent level here. We can see that price is kind of working as this is a top, and the reason we're getting that, I guess, is probably to do with around here, it being around here. Every time price gets to it, it's rejecting. It's managed to break above it. Price hasn't. And this is what you're looking for when you're drawing a level. You're looking for where price is rejecting it the most. You're looking for wicks, and you're looking for where candle bodies cannot close above. Okay, so when we're looking at this level, we're seeing wicks above it, but we're not seeing candle closes, and that is a really good indication that that is a strong level. And when that level is broken, you're going to get a switch in momentum and you're able to get an entry. So for example, we know that this is a strong level here, so when it kind of breaks and it retests, we look at placing a limit order for, you know, above, maybe below a little bit of liquidity. I like to time my stop a lot, so you get maybe like a nice sort of 7R or something, or, you know, maybe aim for like a 5R, or however however your system works, whatever R you aim for. So we're going to move along from this level to the next, which is when price was working in this really nice range that I was talking about, and we had a really good bottom and top. So we can see here that price is broken above that level, and it's just continued to the upside, and it's actually broken above this high. And what's happened then is price has then formed another key level here, and we know that because when price has broken above this previous high and it's come down and retested, which is the market structure I was talking about earlier, this level here, price is strongly rejecting off it and moving to the upside. Every time price comes down and rejects it, it's moving to the upside. So what we're looking for at that point is we're then looking for buys. But when you're doing your back testing and when you're looking at price, okay, very, very easy to forget that, well, it's easy. I'd have just taken a sell at this top here, or I'd have just taken a buy here. You're not actually looking at that. You're looking at this. You're looking at this here. Okay, and what you might be expecting is price just to continue up. Price surprises you, comes back down. So that's when you can then look for different entries, and you can look for entries there. Okay, and price has now come back up. Alright, well, we now know that price has formed a high here. Okay, we can see price is reacting at that level. That's why the market requires a little bit of patience. Okay, is price reacting? Yes, it is. So next time price comes up to that level, what we're looking for is we're looking for one of two things, and this is where you're then looking at different entries. You're looking for a price either to break above it, probably break above that area of liquidity here, and then come back down and retest it and move to the upside, or you're looking for the other thing, which is where price is going to reject off it and come down, and that's then when you're looking to be able to get a sell. So this is where price action and being able to read the price action comes in. Okay, and we can move into more local key levels instead of your kind of higher time frame 4 hours. So when we're getting these rejections, what we're looking for is we're looking for some kind of indication that there is a switch in momentum. Now, people will do it in different ways. I like to try and read a few different things. We can see here that there's a double top. Okay, and also we can see here that there is like a break in this trend. We get a trend line break. So we've got actually two levels of, we've got a few different bits of confluence here. Okay, we've got a trend line break, very, very strong uptrend that's now broken. We've got a double top at this level of resistance, and then we have got a very, very strong engulfing candle at that level as well. And this is where you then start looking for entry, and we are looking for another level to be able to enter at. Now we're on the 4 hour here, so we're looking for market structure at a previous high. This previous high here, getting some good rejections off this level. Okay, no candle closes below it, so when we get a candle close below this on the 4 hour, we know that this is most likely going to just move to the downside, and then look what's happened. This is what I would class as a major level because it's on the 4, or this is like a daily level. So this is like a major level. This is a major level on the 4 hour, and obviously it's going to put me way back here. And we're then going to look for the 1 hour. We're going to look at the 1 hour and see what's going on here as well. And we can see that we are getting closes below on the 1 hour, but these are kind of like fake outs. I mean, I would probably have taken an entry here, to be honest with you. Maybe have waited for the 4 hour, to be fair. So that's some news or something, maybe. Oh yeah, this was tariffs, actually. I think Trump saying something about tariffs for the first time. But yeah, we're just looking for then kind of like some closes below it, and we're looking for a sign. This is, you know, we have a few different levels here. We've got like an hourly level, but I just class this as liquidity, and unless price, what I'd be looking at is like a close really below this level, because that's where the liquidity is lying. But this is just very, very minor, very, very minor. This is a major, and this is a daily potentially even a weekly as well. So that's major, like really, really strong. relatively strong, pretty weak, just liquidity. That's where the liquidity is lying. We're going to move on to Great British Pound AUD very, very quickly, because it's the recent price action has given some good indication, or has given some really, really good levels to be able to work off. So yeah, again, we go onto a fresh sheet, and we're just going to look at this locally, okay? We're not going to go onto the 4 hour. We know price is bullish. We're just going to look at this locally because I really like it when price is choppy like this. If you're just waiting for breaks and retest of structure like this, and you trade with the trend, which is what most people will recommend. It's not really my system. I switch. I trade market structure shifts and trend line breakouts. Crossed with support and resistance. But anyway, we're just going to move on to the hourly, because here's like a really good example of where to draw levels. So as I say, what we're looking at is we're going to go onto the 4 hour, and we're going to look for some of the market structure, and we're going to look where to draw these levels on. So here is a great start. Okay, so we can see here that we've made a new high. We can actually see the buyers are starting to slow down, and we're kind of topping out here. That's where the candle closes are, for example. So we're looking at, this is your top level. There's a liquidity line above it, but people aren't able to break. The price isn't able to break above it. So if we're looking at a level in terms of buys, we're actually looking for a break above this level here. We're looking for a close, and then we're looking. Okay, so that's your top level. Price is obviously very bullish right now. So if we break that, then we're looking for an entry around there. If we're looking for a reversal, we're also looking at another level, which is going to be like here. So we can see that we're getting some previous high. We're getting rejections off it, and that's quite a nice level. And if we go down to the 1 hour, we'll be able to see that level has been in place. So price is not able to break above it. When it does, it's very, very weak, and it's then acting as a form of support. Finally it breaks below it, and then it acts as resistance, and we kind of come down, and we've got a lovely short opportunity. And it's just the same on the way up as well. We've also then got another level here, and as I say, we're looking for the most touch points. We're looking for where price is rejecting the most. Okay, so where price cannot close above or below on the kind of higher time frames. So this is on the hourly, and we're looking at this level here. Probably a little bit above. Maybe this is a little bit wider, so I'd be looking at probably that, to be honest. I'm just finding that there. Very, very weak closes below, and good strong rejections. So as I say, when we're looking at levels, we're just looking at being able to draw where the strongest rejections are, because otherwise you'll start finding levels anywhere. The less you've got, the better, because it clouds your judgment less and gives you better direction. Now, in terms of take profits and stuff, we're not going to talk about that, because that really depends on your system. I like to target 1 or 2 areas away of market structure. But yeah, as I say, when it comes to levels, what we're looking at is really, really strong rejections. We're looking at where wicks are, higher time frame wicks, like little wick offs, and we're looking at candle body closes. Okay, so candle bodies managed to close above this level after we've had this downtrend. We can see this consolidation, so then you can look for a buy, maybe potentially target this area of liquidity here, which turns out would have been the right target, and then we just go from there. When you start drawing on and you start taking in every single fucking level as a level, okay, well, we've got a wick here. Turns out this is a good level. Okay. All right, but then we've got a little bit of a rejection here. We've got rejection there. Okay, that's another decent level. Maybe I'm a little bit too good at drawing these. Okay, like here's a good. Oh no, here's a good example. Okay. What does that matter in terms of recent price action? Not too much, you know. Well, then you can start going, okay, well we've got a level here, and that level actually stretches across that. And I've seen like some people drawing these, and then we've got a level potentially here as well, and then well we've got a level here, and got a level here. Okay. There's a key level in every single bit of this. Where the fuck are you meant to enter? Where the fuck is your entry going to be when you start drawing on everything like this? And then fucking hell, you start putting a fair value gap or two in there, which I think is a fucking load of shit. Then we've got the hourly. That's why I think fair value gaps are just absolute points. Oh, you've got an hourly fair value gap here, and then we're going to find another hourly. You know, we can find. Oh shit, there's a fair value gap. That's a big fair value gap there. Like what the fuck? Like where are you going to enter? As I say, what we're looking for is we're looking for precision, we're looking for precise levels, we're looking for your level to be as small as possible, as least, you know, 5 pips, 6 pips, or depending on what kind of pair you're on, and we're just looking for the most touch points in terms of liquidity and candle body closes. We're not looking at having anything that's too complicated and too much and too wide. If your level is too wide, or if you're finding you're getting too many levels, then you need to start taking some away and start looking at where you're getting the most touch points. It's really, I guess like I've been doing this now for 3 years, so I've managed to refine it and also pick the precise point. I'd say 80% of the time, 70% of the time, I can tell you exactly where price is going to react, and that's why my stops can be really tight. So I get that this comes with time, and really this is just my system of being able to enter. You know, this is just my system. Some people will, as I say, draw fair value gaps. For example, there's a fair value gap here on the hourly, and price. People will say, "Oh, well, price is rejecting off that," so they'll be wait for it. You know. So this is just the way that I draw them on, and remember, it's all very open to interpretation. It's all what works for you, but as I say, you wanna, if you're drawing on too many, if they're too wide, they're wrong, in my opinion. You just want to make sure that there's just touch points and strong rejections off them. More like loads of touch points, strong rejections off that level, and then you can start getting a little bit more precise with your entries. And you know, if you're relatively new and you're just trading like a break and retest structure or break and retest system, like a very, very basic break and retest system, then you're then looking for just like the high and price to break above that and then a high. So then you're going to be looking on the 4 hour. So yeah, as I say, very, very open to interpretation, and that's the way that I draw them on. So just to recap, we're looking for strong rejections on the higher time frames. We're looking at market structure, okay, and we're looking for where candle bodies cannot close above, and we end up seeing wicks. That's then where you're drawing on your levels. Anywhere else, in my opinion, is completely irrelevant, but that's just for the system that I trade, which, I mean, so far this week I've posted up a 56R, I think, 56R return, and I've managed to, I think, make like 12R out of that 56R. Obviously, I'm not in front of the charts all the time, but, you know, clearly the levels that I'm working off are correct, so, you know. There you go, guys. Very, very quick way of drawing on lines. Sorry if it's dragged on a little bit too much. I've tried to make it as quick as possible. So if you've got like any tips for the videos apart from the audio, which I'm waiting on a mic, and there's other things that you want to see, like, please put them in the comments. Please engage with it. You know, please like the videos. Please subscribe. I'm growing this YouTube from absolutely nothing. We've got like 45 subscribers so far. So, you know, I appreciate all the engagement, and any tips and advice I really, really appreciate as well, or anything that you want to see. So Cheers, guys.